Welcome to Illuminati Silver. We tell the truth about silver. Today is Sunday, the 6th of August 2023. And last week we saw gold and silver prices fall a little. However, they staged a reasonable recovery on Friday, which then begs the question, are we going to see higher prices this coming week? Or will the CPI data that will be announced later in the week scotch any plans for higher prices? Well, let's take a look. Before we take a look at what happened this past week, just a reminder that we have another channel entitled Finances Do Matter here on YouTube, and have placed a link to this channel in the description box below and also in the comments section. Gold fell $17 last week, falling from $1,960 to $1,943, having been as high as $1,972 and as low as $1,930, a fall of just under 1%. In sterling terms, gold is virtually unchanged at £1,525, and in euros it's down 13 euros at €1,767. Looking at silver, we can see that silver performed worse than gold, being down almost 3%. It fell some 71 cents from $24.35 to $23.64, having been as high as $26.09 and as low as $23.35. We shall discuss what happened shortly that caused an almost $3 spread between its high and low. In sterling terms, silver is down 40p at £18.57, and in euros it's down 63 cents at 21.51 euros. The gold to silver ratio rose and is currently standing at 82.2 to 1. Bitcoin's down a little again this week and is just holding above the $29,000 level at $29,014. Equities were down Friday, but are attempting to hold ground, with the Dow Jones at 35,065, the S&P index at 4,478, and the Nasdaq at 13,909, and the FTSE 100 index at 7,564. Interesting to see that US indices were broadly down close to 0.5% on the week, and the European indices were broadly up a similar percentage. Oils were up again on the week, with Brent crude at $86.24 and WTI crude at $82.82. The dollar index, although down 0.5 point on Friday, is managing to hold just above the 102 level. As we mentioned in last week's update, there was some important economic news to watch out for. Manufacturing PMIs were broadly in line with expectations. The ADP employment report, though, came in almost double expectations, with 324,000 new jobs created for July, which helped cause a dramatic fall in the price of gold and silver on Wednesday, as they were forecasting forward the effect on the non-farm payrolls due on Friday. Services PMIs again were close to expectations, but when the non-farm payrolls actually came in on Friday for July, they were weaker than anticipated at 187,000 new jobs, some 13,000 lower than expected, but almost similar to the previous month's figures. A little more concerning, perhaps, is that the unemployment rate fell from 3.6 to 3.5%, and hourly wages remained at 0.4% for the month, though economists were expecting a rise of just 0.3%. Year over year, wages seem to be holding strong at 4.4%, which does not help the Fed achieve its ultimate inflation target of 2%, and does suggest that the economy, though still robust, may still also not have ridden the economy from inflation. As we've stated time and time again, unless oil prices can be reduced down to and below $70 a barrel, it's going to be very difficult to achieve the Fed's target without pushing the US economy into recession due to ever-increasing interest rates. Now, we have some interesting data appearing this coming week, with the consumer credit figures for June being announced on Monday. On Thursday, though, most crucial day, we have the CPI figures. Yes, more inflation figures, with both CPI and core CPI for July expected to come in at 0.2%. And if this is the case, this will provide CPI year over year at 3.3 and core CPI at 4.7. Any deviation from this will likely have a considerable effect on markets, either up or down. On Friday, we also have the Producer Price Index, which should not be ignored, but of course will be shadowed by the CPI figures. So let's conclude this report by looking at gold and silver and perhaps help forecast where we see their price moving this coming week. As far as gold is concerned, chartists, or those following technical analysis, believe that in spite of its small fall last week, Friday saw an intraday bullish reversal, with its price resting around its 100-day EMA, seen as resistance. If gold, therefore, can rise above $1,948 on Monday, they believe this could create a bullish signal, pushing it above 1955 and then eventually heading towards 2000. Our view is that yes, there could be a minor bull trend developing next week, but gold's price oscillated $42 last week, and unless the CPI figures are indeed very favorable, i.e. lower than anticipated, we simply cannot see that catapulting gold beyond $1,980. In other words, close to another $40 move. If CPI remains stubbornly high, we could see gold looking at the 50-week EMA at $1,900, which coincidentally is just around that $42 difference from its current price. You can guess where we shall be pitching our forecast for this coming week. Looking at silver prices, it was a volatile week with even more volatility than we were expecting. Silver took a pounding on Wednesday, but the non-farm payrolls enabled it to recover a little on Friday. We were quite encouraged to see it rally to $26, which does suggest underlying interest. But its fall to $23.35 just proves how undecided traders really are at this stage. And of course, as we've mentioned previously, in the summer months, when many traders are on holiday, we can expect perhaps reasonably high gyrations between highs and lows. We will expect silver to strengthen just a little until the CPI figures are declared on Thursday, and then we will have a clearer guide as to both the direction for gold and silver until September is reached. Either way, we're expecting gold to trade this coming week. Yes, I know it's boring, but between this $1,900 and $2,000 level. As an outlier, it could potentially fall to $1,880 or rise to as high as $2,020. Frankly, we're not expecting it to enter into this outlier range unless it's by perhaps just a couple of dollars. Silver's a little more interesting. We envisage it to trade within a margin again of around $3 between high and low, depending on the CPI figures. So our normal predictive range is $22.50 to $25. Perhaps it'll be towards the upper end of that, with $22.25 to $25.75 as outliers. What do you think? Do let us know in the comments. Before we go, just a reminder about the links to our Finances Do Matter channel. And we are back from holiday on Friday, whereby we shall resume our normal production for both Finances Do Matter and this channel from the weekend onwards. Meanwhile, have a great weekend, a safe weekend, a prosperous week ahead, and please give this video a thumbs up, subscribe if you haven't, and press the bell sign. See you soon.